Hey everybody, in this video we'll be learning about accounting treatment to provide for various non-profit organization transactions. So what is this? The first question, what is a non-profit organization? That will be our basic question. A non-profit organization, as the name itself suggests, it is an organization which is not for profit. The basic motive for any business to have been established would have been profit, but whereas non-profit organization, the objective or the motive of the organization is not profit but towards certain other objectives which is relating to promotion of art, culture, science, commerce, all these areas. So their objective is different. It is not to earn profit but to promote these areas of activities is called as a non-profit organization. So by this you would have understood which all can be a non-profit organization: your clubs, your charities, your educational institutions, your societies that are formed, hospitals, temples, etc. For example, this hospitals, the objective of hospital is not to earn profit but to save the lives. So this is what differentiates a non-profit organization from a profit organization. Apart from this, there are various other aspects that separates a profit organization from non-profit organization. The first one being the importance in the non-profit organization is given towards the spends and receipts that a non-profit organization gets. That means from a profit organization perspective, the important thing is what is the net worth of the company, what are the value of the assets, how much is the liabilities to be settled off. So all of these are the areas of concentration, but whereas when it comes to an NPO, the areas of concentration is more about what is the receipt that has been received by the non-profit organization, and out of that how much is it spending towards its objectives, towards the purpose for which it has been established. So this is the first and major differentiation between the non-profit and profit. And coming to the next point, the profits of a profit organization is shared amongst the contributors, amongst the owners, amongst the members, whatever you call. But whereas for a non-profit organization, there is no sharing of profit. Ultimately, the amount, whatever the receipt it has been receiving or the surplus, has to be utilized towards helping towards the objectives of the non-profit organization. Then the next important thing is analyzing whatever the amount that has been received by NPO, is it a capital receipt or a revenue receipt? The expenditure that an NPO is doing, whether it is a capital expenditure or a revenue expenditure. So these are the areas, main areas of concentration when it comes to a non-profit organization. So for this purpose, you need to know what is a capital receipt, what is a revenue receipt. So coming to capital receipt, which is received, which is not very frequent in nature. You will be receiving it very rarely, those kind of amounts you will be receiving. It's not very frequent, and also it is received for a specific purpose. For example, towards the scholarship. For that purpose, you would have received a fund. So there is a specific purpose for which you have received a particular donation from a XYZ person. That's called as a capital receipt. Revenue means the general donations that who come to your non-profit organization and donate you some amount of money with respect to any general kind of expenditure that you can take up for your betterment of the objectives. That's as a revenue receipt. Capital expenditure can be for purchase of fixed asset, which is basically not very frequent in nature. Revenue expenditure is the expenditure that you incur towards day-to-day operations of the non-profit organization. With a small background and difference between capital and revenue, we can start working towards in order to prepare the final accounts of a non-profit organization. But before that, we need to understand various terms that come under an NPO in order to understand whether it's a capital or revenue. Logically speaking, we know, but what about the specific funds that a company receives, whether it is a capital or revenue? Based on this, applying this logic, we'll have to divide whether it is a capital receipt or revenue receipt. Some of the lists, like I have prepared a small list which might help us in understanding the receipts and expenditures better. The first one is a capital fund. As the name itself suggests, it's capital which is contributed by the members of the non-profit organization in order to help for their objectives. They would have contributed that along with any accumulated surplus, that is year on year when they are performing their operations, they will be getting something called a surplus. For a profit organization, you call that as a profit and loss. For a non-profit organization, if income over expenditure you are having for that year, it's called as a surplus, and expenditure over income, it's called as a deficit. So that any accumulated surplus, any accumulated deficit you have, that will be added to the capital fund of the non-profit organization. Coming to donations, when we hear the word, it's more towards a general purpose. So if it is received towards a general purpose for an NPO, then it is obviously a revenue receipt. But whereas if a donation has been received for a specific purpose, it's basically called as an endowment fund, which is given towards a particular purpose, like towards building, in order to help for infrastructure purpose, or like I've already told, towards scholarship if they have received. The entire amount that has been received cannot be transferred to revenue received immediately. Why? Because the spend might not happen immediately. So you need some time towards achieving that objective. That is the reason why you will not take entire receipt to income directly. Instead, you're going to capitalize it and show it as a liability in your balance sheet. And as and when you utilize the amount, you will transfer the amount to your P&L account. Income and expenditure account. That is how you're going to transfer. So this is how a special fund works. Coming to the next one, which is entrance or admission fee, which is received by the members while joining as members of the non-profit organization. That's like a one-time receipt. Since it's a one-time receipt, it's called as a capital receipt. So you will be adding that to your capital fund. Then coming to subscription. Subscription, as the name itself suggests, you have to subscribe in order to avail the services of a non-profit organization. So such subscriptions received by the non-profit organization, it is a revenue receipt. It's not a capital, because year on year, or basically whatever the terms that you have, half yearly, quarterly or yearly, you will be receiving these subscriptions. So such subscriptions are in nature of revenue. So it's called as a revenue receipt. Coming to life membership fee, as the name itself suggests, again it's a one-time receipt. So in order to become member of an NPO for the entire life of the NPO, you would have paid some amount. That's again like a one-time fee which will be added to your capital fund, and it's called as a life membership fee. So it's a capital receipt. You will be capitalizing that. Coming to legacy. Legacy is the amount that will be received out of the will of a person who is in his or her deathbed. So that will that you're going to receive, it's called as a legacy, which is again, it's a one-time receipt. This is not something that generally happens. So that is why it's called as a capital receipt and will be added to your capital fund. And something called as honorarium. Honorarium is the amounts that you pay to an outsider for their service. For example, you are an educational institution and there is a guest lecturer who is coming in to your organization to provide lecture to the students. So in that case, when the guest lecturer is providing services, you have to pay something for their service. So that amount that you're going to pay to the guest lecturer, which can be the actual amount or a nominal kind of amount as a token of thanks giving. So that amount that you're going to pay to an outsider for their service is called as an honorarium. So this is something, it's like a capital, like for the day-to-day operations of the non-profit for your educational institution. So that will be considered as a revenue expenditure. So when I'm telling you revenue and capital, revenue items are those, be it receipts or expenditure, that is something you will be taking it to your income and expenditure account, and this is something which happens within that year. So you'll have to find the revenue and expenditure of a non-profit organization for that year. Whereas whenever I'm saying capital receipt or capital expenditure, that will not be utilized within that 1 year. It might take more than 1 year. That is why you're not going to show it in your income and expenditure. Instead, you're going to capitalize it and show it. If it is in the nature of asset, you're going to show it under asset. If it is in the nature of liability, you'll be showing it under liability. So with this basic knowledge, in my next video, I will be trying to make you understand about how to provide accounting treatment for the advances received for the or advances that you have paid, or subscriptions receivable, or subscription advance that you would have received. What is the treatment of all this? And when I'm saying you have to show it under income and expenditure, what does that actually mean? When I'm saying you have to show it, capitalize it and show it under liabilities or assets, how and write it off against income and expenditure as and when you utilize it, what does that mean? All of these treatment along with examples of sums will be discussing in the next video. Thank you.